Welcome to The Explainer. Today we're zeroing in on Five Star Business Finance and a massive new capital strategy they're rolling out. If you follow the financial sector, you know that keeping a close eye on how non-banking financial companies, or NBFCs, structure their capital is absolutely crucial. We're going to break down their latest annual report and the notice for their 42nd annual general meeting for the 2025-2026 financial year. Specifically, we'll be unpacking their bold plan to raise up to 5,000 crore rupees. All right, let's dive right in. I want to start by asking you a pretty fundamental question. When you think of a manufacturing company, their raw material is obvious, right? Steel, plastic, wood. But what exactly is the raw material of a massive financial services company? Like, what actually fuels the day-to-day operations of a lender that provides secured loans to small business owners? Take a second and really think about it. Well, this quote right here brilliantly captures the answer, straight from the pages of Five Star's own annual report. Money is the raw material in our business. It's a beautifully simple philosophy. It establishes that for Five Star to lend money to a small business for, say, an expansion or renovation, they have to first borrow that money themselves. And they've got to do it efficiently. The cheaper and more effectively they can source this so-called raw material, the more successful their entire business model becomes. So here's our roadmap for today. First, the raw material of finance. Second, funding the future. Third, the main event, the 5,000 crore debenture plan. Fourth, understanding private placement. And finally, your voice at the AGM. Starting off with Section 1, the raw material of finance, and building a strong liability profile. You see, a resilient and diversified borrowing profile is literally the foundation of their growth. They can't just rely on one single source of money. They need a really robust mix of capital markets, domestic institutions, and international banks to make sure they always have liquidity. And look at the sheer scale we're talking about here. As of March 31st, 2026, the company's total outstanding borrowings sat at a staggering 8,200.43 crores. But here is the crucial context you need. Despite that massive number, they maintain a very comfortable debt-to-equity ratio of just 1.11. Now, in previous years, this was at 1.26 and 1.22. So this drop really shows they have a strong liquidity cushion and plenty of headroom to take on fresh debt for future growth without over-leveraging themselves. And they aren't just borrowing from anyone either. Over the 25-26 financial year, they added 3 major new lenders to their roster. We're talking top-tier global institutions. They executed a $75 million securitization transaction with JPMorgan Chase Bank and secured a massive $100 million line of credit from the Asian Development Bank, or ADB. Plus, they brought on Kookmin Bank. Getting such pedigreed institutions to actively fund them, that demonstrates immense tangible confidence in Five Star's underwriting model, their corporate governance, and their overall standing in the market. Moving on to Section 2, funding the future. This is really a story of efficiency. Because having access to debt is one thing, right? But how efficiently a management team actually handles that massive debt load is the real test of a financial company. And there's a brilliant narrative of efficiency playing out here. Just take a look at the cost of their incremental debt, meaning the interest rate on the new debt they took on. Back in financial year 25, they raised funds at a cost of 9.46%, but jumped to financial year 26 and they raised over 2,900 crores at an all-inclusive cost of just 8.50%. They literally dropped the cost of acquiring their raw material by almost a full percent in a single year. And if you zoom out over the last 5 years, they've actually managed to bring down their overall cost of debt by about 1.30%. That's huge. So why does that reduced borrowing cost actually matter? Well, it leads to this, right here. Starting around November 2024, Five Star intentionally dropped their lending rates to their own customers by about 2% on incremental disbursements. Because they're getting their raw material cheaper, they can turn around and offer way more competitive loan rates to the small business owners they serve. This drives higher demand, better loan performance, and ultimately massive business expansion. It's basically a perfect cycle of financial efficiency. Which brings us to Section 3. The 5,000 crore debenture plan, which corresponds to Special Resolution Item Number 7. With borrowing costs down and the business expanding, the board is making a pretty massive request for new capital. Let's look directly at the source document from the notice to members. Item 7 seeks shareholder approval to authorize the board of directors to issue, offer, or invite subscriptions for non-convertible debentures, or NCDs, aggregating up to 5,000 crore. That's 5,000 crore Indian rupees. And this resolution is specifically structured to let them do this on a private placement basis in one or more tranches over the course of the entire year following the AGM. Now, it's really vital to clarify something here. A company asking to raise 5,000 crores in debt is absolutely not a sign of financial distress, especially given that healthy 1.11 debt-to-equity ratio we looked at earlier. This is a highly calculated move. The explicit purpose, as stated right in the documents, is to fund business expansion, meet working capital requirements, and specifically cater to their surging loan disbursement needs. Put simply, they need more raw materials so they can manufacture more loans. And to actually accommodate this aggressive growth strategy, you'll also see Special Resolution Item 5 on the AGM agenda. This item asks shareholders to increase the company's overall maximum borrowing limit. Previously, it was capped at 12,000 crores, but the board is now requesting to bump that ceiling all the way up to 13,000 crores, with this 5,000 crores debenture plan acting as a sort of sublimit within that new overarching boundary. All right, Section 4, Understanding Private Placement. Let's do some quick jargon buster. The financial terminology in Item 7 can be a bit dense, so let's break down exactly what non-convertible debentures on a private placement basis actually means in plain English. First, an NCD, or non-convertible debenture, is essentially just a loan. The company issues paper saying, hey, we owe you this much money plus a fixed interest rate. The non-convertible part is the key for existing shareholders. It means this debt can never be converted into equity shares. So, Five Star gets the cash they need to grow, but the ownership percentage of existing shareholders is completely protected from dilution. So, what about the private placement part of this plan? Well, instead of a public issue where the debt is offered to retail investors like you and me through a long, drawn-out public offering process, Five Star's plan relies entirely on private placement. This means they're going to be negotiating and issuing these debentures directly to a select, targeted group of identified domestic or non-domestic institutions. Think back to those massive deals with JP Morgan and the Asian Development Bank. By using a private placement strategy for these debentures, the board gets the flexibility to quickly negotiate the absolute best terms, interest rates, and timing directly with major institutional players. It makes the whole capital raise incredibly swift, targeted, and efficient. Finally, Section 5, Your Voice at the AGM and Taking Action. If you're a stakeholder in all this, how do you actually weigh in on this 5,000 crore private placement plan and the other resolutions? Well, here are the logistics. The 42nd Annual General Meeting is scheduled for Monday, August 31st, 2026, at 10 a.m. Indian Standard Time. The most important detail to note here is the venue. You do not need to travel. The meeting is being held entirely through video conferencing, or VC. That means physical attendance isn't required at all, making it incredibly easy and accessible for all members to log in and observe the proceedings. But honestly, you don't even have to wait for the actual meeting to cast your vote. Here is your actionable roadmap. Step 1, you must hold shares by the cutoff date, which is Monday, August 24th, 2026. Step 2, the remote e-voting window opens up on Friday, August 28th and closes on Sunday, August 30th. You'll just log into the NSDL or National Securities Depository Limited portal using your DMAT account credentials. And Step 3, review the agenda and cast your remote e-vote to formally approve or deny the 5,000 core debenture plan, along with the other items. So, we've walked through the mechanics of their capital strategy. Five Star Business Finance is aggressively lowering their borrowing costs while simultaneously seeking shareholder approval to dramatically expand their capital limits through private placements. They are loading up on their core raw material. The question I really want to leave you with today is this. With this massive influx of highly efficient capital, what new geographic regions or lending products will Five Star's 5,000 core raw material unlock next? Keep a close eye on this space. Thank you so much for joining me for this explainer, and happy learning.